So how do you determine the cost of flood insurance? Well, there are some essentials of rating that you need to know about. And there's a list that is in the flood insurance manual of how to determine a rate. First thing you need to know, well, what's the community? Is it in the emergency or the regular program? Because that's going to determine how much coverage you can write. What is the structure in which you're going to write policy, a pre-firm or a post-firm structure? Remember, we talked about pre-firm being built before the initial flood insurance rate map issued and adopted by the community. Post-firm is structures that are built after that initial identification. How much coverage are you going to write? Are you going to write full replacement cost? Are you going to only write 80% of replacement? There is the replacement clause in the flood policy, just like you have in a homeowner's policy. What's the deductible? We can write up to a $10,000 deductible on residential property. What flood zone is it in? Is it in an A, B, C, an X, or a V on the coast? What's the building occupancy? Is it a single family? Is it a 2 to 4 family? Is there a business in there more than 50%? So all of these go into defining what the building occupancy is. What's the building type? Is it an elevated building? Does it have a basement? Does it have an enclosure? Is it a slab on grade? How many floors are there? We figure the premiums where everything is throughout the building. But if you've got multiple floors, when it comes to contents, you may have a lower premium. What's the foundation type? Is it again a slab on grade? Is it an elevated building, elevated on pierced post pilings or shear walls? When you get into coastal communities in the V zone, you're going to be dealing with those types of foundation because that's the required foundation for coastal areas. Where's the machinery and equipment located? Now, when we talk about machinery equipment, we talk about 5 pieces of machinery equipment. We talk about the air conditioner, the furnace, the hot water heater, the elevator and any attendant utilities, and the heat pump. Where are they located? In some cases, you may pay an extra premium if they're below the base flood elevation. Then we look at the difference between the base flood elevation and the lowest floor elevation. Of course, if the lowest floor is higher than the base flood, the premium is reduced. Conversely, if the lowest floor is below the base flood, then the premium is going to be higher because the risk is higher. Does the community participate in the community rating system? That is a program that we have that rewards communities who do things over and above the minimum standard. There's a whole section in the National Flood Insurance Manual, and it'll give you the list by state of the communities that participate and don't participate. One interesting fact about that, 70% of the policies written, a little over 5.2 million policies, are located in CRS communities. Then on top of that, you're going to add any fees or surcharges. We have a federal policy fee that helps in the administrative cost of the program. And then, of course, we have our Homeowners Flood Insurance Affordability Act surcharges that goes on top of the premium, either $25 or $250. Let's talk about foundation types. These are key to the floodplain management and flood insurance in the program. The type of building determines where the lowest floor is measured, depending on whether it's a non-elevated building, what flood zone it's in. Again, we've got another section that's got over 70 pages to determine what the lowest floor determination is for rating, section in the manual. So occupancy types, we talked about single family, 2 to 4 family, other residential, non-residential, business, and non-residential other. There's always the condominiums, whether it's a single unit being insured or whether it's a residential condominium association building. We also have non-residential condominiums that we have to cover in the National Flood Insurance Program. And then we've got manufactured homes. So those are the occupancy types. Earlier, I gave you the list of coverage. This graphic will show you how it breaks down in the National Flood Insurance Program for the different occupancy types, both for building and for contents. When we talk about condominiums, they are a whole different category of insuring for flood. There are different types of condominium. As I said, there's non-residential, there are residential, whether or not you're covering the unit or covering the whole building. As a unit owner, typically you'll need to provide acceptable proof of insurance for either your unit or from the association. So how much coverage is available under condominiums? Well, we can write up to $250,000 times the number of units in the condominium building or the replacement cost of the condominium building, whichever is less. If you've got multiple buildings, there's a policy going to be on each one of the buildings. As a unit owner, coverage can be written for that individual unit owner if the association does not buy coverage for the whole building. And that would be up to $250,000 for that unit only. When we talk about deductibles as a rating method, depends on whether the structure is a pre-firm or a post-firm structure. What flood zone is it in? We do have minimum deductibles. In the emergency program, the deductible is $1,500. For the minimum deductible in the regular program depends on whether or not it's a pre-firm or post-firm structure, whether or not you're rating it as a subsidized premiums. Could be as low as $1,250 or as much as $2,000. You can get higher deductibles. It lowers the premium up to $10,000 for residential or up to $50,000 for non-residential structures. A word of warning, if you're going to do a higher deductible, make sure that the mortgage company will accept that higher deductible. It's very important that they do that before you finalize that paperwork for that property owner. So in the general rules, there is a 30-day wait period. That 30-day wait period comes to us thanks to the Midwest floods that we had in 1993. Before that, we had a 5-day wait period, but there were more in the 1993 floods. There were multiple floods, and people flooded the first time, didn't have flood insurance, saw the flood coming down the second time, ran to their insurance agent, tried to make sure that there was coverage in place, less than 5 days, and it worked in many cases. We paid over $87 million in the Midwest floods for coverage in effect less than 30 days. So when Congress gave us our National Flood Insurance Reform Act of 1994 legislation, they changed the waiting period from 5 days to 30 days. And we have that still today. There are a couple of exceptions to those. One is if there is a map revision and the policy is written within 13 months of that map revision, there is a 1-day waiting period that the insurance agent can put on the effective date. If the insurance is for a loan closing, there is no waiting period. So the policy can be written as of the date and time of the closing. Flood insurance policies are written for 1 year. Premiums must be paid upfront in full at this point, but it is one of the few policies that can be assigned to the new owner. And this could be used for several reasons. One is to show continuous coverage, to use the grandfather rule. These are very important pieces of rating a flood insurance policy. So when we talk about lowest floor, and as I said, we have a whole section in the flood insurance manual that talks about how do we determine which floor of the building are we going to rate the policy. If a structure is a post-firm building, meaning it was built after the initial flood insurance rate map was adopted by the community, it has to meet certain standards. So those standards are the difference between the lowest floor and the base flood elevation. So determining lowest floor depends on essentially what's the lowest floor of a building where you walk and what is that elevation. We have some specific building drawings in our lowest floor guide that help walk you through various types of structures that are out there to determine what's the lowest floor for rating, and then we use that to determine the difference between that and the base flood. An elevation certificate will be needed for any post-firm structure that is located in a special flood hazard area, or if you've got a pre-firm structure that by chance meets the post-firm standards, you'll still need to have an elevation certificate to document that. Again, the higher the difference going up, the lower the premium. The higher the difference going down, the more the premium is going to be. So if you're looking to build a structure or insure a structure that is being built, you need to counsel your client that basements, lowest floor of basements are the lowest floor of a structure. So when we're looking for the lowest floor elevation and the base flood elevation considerations, we have to look at a couple of things on the type of building that it is. Does it have an enclosure? Does it have a crawl space? So we look at being able to forgive that enclosure, crawl space, based on making sure we have proper openings, 1 square inch per 1 square foot, and that the enclosure is only used for parking, storage, or building access. Same thing for the garage. If the garage is building access and limited storage, if it does have proper openings, we're going to move to the next higher floor, which could be, 4 or 6 inches difference, and 6 inches could move it up to the next foot. Of course, basements are a whole different other situation. Unless it's a residential flood-proofed exemption community, we're going to rate the policy based on the floor elevation of that basement to the base flood elevation. Hanging enclosures is something we're seeing a little more often than we were of 10 or so years ago, where hanging enclosures, where the floor of the enclosure is actually above the ground level. Under certain circumstances, that may be the lowest floor, particularly if it's located in a coastal high hazard zone or a V zone. Just like rounding in rating, we round to the nearest whole foot when we're looking at elevation difference. And of course, if the community is a CRS community, if that policy is rated -1 or greater, -1, -2, -3, it does not get the CRS discount that everybody else is enjoying. So for non-elevated buildings, we're talking about slab foundation or basement foundation structures. For elevated buildings, the top of the elevated floor could be used providing the enclosure has met the openings requirement and is only used for parking, storage, and or building access. So in those approved communities, most of them are in the Midwest areas that have residential building with a basement floodproofing certification. We can accept the lowest floor to go up to a higher level. However, those basement exceptions have to be renewed periodically. So one of the things about basement enclosures and enclosures implications are it encourages non-compliance. It encourages structures to be built below base flood elevation. It definitely increases the cost of flood insurance. It increases disaster assistance because disaster assistance is paid on the whole building, not like flood insurance. So we may be paying disaster assistance for structures located in basements for contents. It increases flood claims. We do have limited coverage on those basements or enclosures that increases the cost of claims. Of course, that's where the water is going to settle. That's where it's going to go first. So that's going to be the most damage. It conflicts between floodplain management officials and flood insurance policyholders. They think just because they can build a structure with the lowest floor below the base flood, property owners think that they're going to have coverage for that, and they don't. So beware if you are an insurance agent and you've got a structure that's got an enclosure, got a basement, make sure you tell them about the 17 items, building items that are covered under the NFIP, and only the 3 content items that are covered, and that is washer dryer, portable air conditioner, and a food freezer. It also increases the debris when floods come in and those contents are washed away or washed into somebody else's property or washed into culverts, and increases the flood heights for structures that might be downstream. So basements and enclosures just add to the cost of flood events. In the community rating system, I briefly talked about that already. Communities, again, voluntary, apply for discounts based on activities that they do. It works around reducing flood losses, and it facilitates the accuracy of flood insurance rating. But it does most and foremost promote the awareness of flood insurance. Communities have to be in full compliance of the National Flood Insurance Program in order to participate in the program, which means their floodplain management program has to be compliant. They have to be make sure that they're regulating development within their special flood hazard areas properly and according to their ordinance and the minimum criteria of the National Flood Insurance Program. And they have to be in the regular program. So there are, for every 500 points, they save 5% for structures located in special flood hazard areas. So for a Class 1 community, they can save up to 45% of the premium in special flood hazard areas. We also give discounts for structures located in non-special flood hazard areas, up to 5% for Class 9 through 7, or 6 through 1, they get a 10% discount. Sorry folks, preferred risk doesn't get any further discounts than what the premium is already. So there are 4 major categories that communities can get credit for. One is public information. Do they make zone determinations? Do they put out outreach materials? Do they have a website? The next one is mapping and regulations. Do they have higher standards? Do they have a freeboard on top of the base flood elevation that we give them on our flood insurance rate maps? Do they participate both financially and engineering-wise in preparing the maps? Do they do flood damage reduction? And what kind of flood preparedness do they have? Do they have flood warning systems? Do they have gauges, stream gauges that they can help to identify where the flood is located and how deep the flood waters are getting? So those are 4 major categories. There's like over 90 categories that they can get points in. And like I said, every 500 points, they drop a class. So most of our CRS communities, as of October 1st of 2016, we have 1,416 CRS communities participating. Most of them are in classes 7, 8, and 9, which are 15, 10, and 5% discount. We have one class 1, which is Roseville, California. In Region 6, we have Tulsa, which is a 2, and we have in Region 8, Fort Collins, which is a 2. So those are 3 best communities that we have in the National Flood Insurance Program. Showing graphically where they're located, most of them are in your metropolitan areas. We have a lot in Florida. As communities become aware of the National Flood Insurance Program, CRS, we're trying to get them to go into higher standards and go into this way of reducing flood insurance. The elevation certificate and the floodproofing certificate are the 2 very important documents that we use, not only for floodplain management, but for exemptions of structures based on anomalies of the ground, and for the floodproofing. So on an elevation certificate, we use it for several sections of the National Flood Insurance Program. One, it certifies the structure's floor elevations, both for insurance rating and for floodplain management. It gives us the elevations of the grades adjacent to the building. In the cases of exemptions from the floodplain, letters of map change, letter of map amendment is an example where the natural ground is an anomaly and may be higher than the base flood elevation as shown on the map. Letter of map revision based on fill is where fill has been brought in to elevate a structure, and if it's elevated high enough, either for a LOMA or a letter of map revision based on fill, if the lowest adjacent grade is above the base flood elevation, they can apply for an exemption from the floodplain, and they actually come out into a B, a C, or an X zone, a low or moderate risk flood zone. It also is used to document machinery and equipment. In coastal areas, that machinery and equipment carries an extra premium on the flood insurance policy for if that machinery equipment is below the base flood elevation. We also use it to document the size of an enclosure or a garage. Again, our proper openings in that enclosure or that garage, 1 square inch per 1 square foot, how it's used, parking, storage, building access. We can forgive that area and move to the next higher floor. Floodproofing certificates are used for dry floodproofing non-residential structures. In order to get credit for that dry floodproofing, it's got to be 1 foot above the base flood elevation for insurance purposes. For floodplain management, it just needs to go to the base flood elevation. However, the insurance rating is going to be higher. Don't forget those communities that have applied and received a residential basement exception, where we will, if basements are flood-proofed, will not use the basement floor as the level for rating. So the elevation certificate must be completed by a licensed land surveyor, registered engineer, or architect, licensed by the state in which they do their work. In some cases, they can be done by the local official or even by the homeowner. Those in flood zones AO or in flood zones A, where FEMA's not established a base flood elevation or the community's not established a base flood elevation. And we're looking at the difference between the lowest floor and the highest adjacent grade. In the AO zone, there's a depth on the map, so it's got to be equal or greater than that depth difference. In a numbered A zone where the base flood has not been established, in order to get a good or a better insurance rate, that has to be at least 2 feet between the grade and the lowest floor. We have a new form, and as an insurance agent, you need to be sure that you have 2 photos from 2 different sides of the building attached to that elevation certificate. The certificate's going to have the base flood elevation on there. One of the things you need to look at is to make sure that the base flood elevation in most cases should be coming from the flood insurance study or the FIS instead of from the map. When we make maps, our older maps, we round that base flood elevation. So it is important that when you look at that elevation certificate, that the surveyor is picking that base flood from the FIS study. If the lowest adjacent grade is at or above the base flood elevation, the property owner can apply for what is called a letter of map change. If it was elevated on natural grade, they're going to apply for a LOMA, letter of map amendment. If it's been elevated on fill, it's going to be a letter of map revision based on fill. LOMAs cannot be done in unnumbered A zones where base floods have not been established at this point. So in the graphic, this is what the new form looks like. This is page 1. We're looking in the A section, we're looking for the size of those enclosures and garages, and we're comparing how many openings they have in those. The elevation certificate signature and comments are now on page 2. This is a 2-page form. Then you're going to add whatever photographs you have to that, and that will be submitted with your application. And you need to be aware of what elevation you're going to be using to rate that flood policy. So you need to know the rules on how we rate based on elevation difference.